Welcome to Stocks Telegraph, your essential guide to the dynamic and diverse world of stock market investing. Today, we're focusing on a particularly intriguing category of investments, stocks priced under $20. These stocks often represent undervalued companies with significant growth potential, making them ideal candidates for long-term investment strategies. Investing in stocks priced below $20 can be a smart move for several reasons. Firstly, they often belong to companies on the verge of substantial growth, offering the opportunity for significant returns. Secondly, these stocks can add a layer of diversification to your portfolio, tapping into emerging industries or revitalizing sectors. Lastly, their affordable price point allows for greater flexibility in managing investment volumes. In this video, we'll delve into 5 promising stocks, each priced under $20, that stand out for their potential in the long term. We'll explore various sectors, from tech to healthcare, each with its unique growth story and market position. Whether you're a seasoned investor looking for hidden gems or a newcomer to the stock market seeking affordable entry points, this segment is tailored for you. Let's discover these under $20 stocks that could be the cornerstone of your long-term investment journey. Hit the subscribe button and ring the bell for notifications, so you don't miss out on any future insights from Stocks Telegraph. And now, without further ado, let's unveil these promising stocks and dive into their financials and latest news. First up on our exploration of under $20 stocks for long-term investments is Uranium Energy Corp, trading under the ticker UEC. As a key player in the uranium mining sector, Uranium Energy Corp is riding the wave of the growing demand for clean energy sources, and its market position is stronger than ever. Currently priced at $6.52, UEC shows immense potential, with analysts setting a mean target price of $7.12. This pricing indicates a positive market sentiment and underscores the company's growing appeal in the investment community. A standout year-to-date performance of 125.61% further cements its status as a rising star in the uranium sector. What's truly impressive about Uranium Energy Corp is its earnings per share growth, which has soared by 103.90% this year. This significant growth is a clear indication of the company's robust financial health and its potential for continued expansion. Equally important is UEC's debt-free status, boasting a debt-to-equity ratio of 0.00, underscoring its sound financial management and operational stability. The resurgence in uranium prices to multi-year highs has been a boon for Uranium Energy. The company's current revenue is directly tied to these rising uranium prices, benefiting from the sale of uranium bought at lower spot prices. Moreover, UEC's strategic acquisitions over the past year are expanding its resource base, setting the stage for future uranium production and enhanced market positioning. For those looking to invest in the clean energy sector with a company that has a solid track record and promising growth prospects, Uranium Energy Corp offers an attractive option. With its focus on expanding its uranium resources and capitalizing on the rising demand for clean energy, UEC is not just participating in the energy transition but is actively shaping it. Continuing our journey through under $20 stocks with potential for long-term growth, we turn our attention to Coursera Inc., trading under the ticker COUR. As a pioneer in the online learning space, Coursera has redefined access to education, partnering with top universities and companies worldwide to offer a wide array of online courses and degrees. Coursera's stock performance this year has been commendable, with a year-to-date increase of 66.95%. This growth is reflective of the company's expanding influence in the online education sector. The gross margin stands at a healthy 53.91%, indicating Coursera's efficiency in managing its operational costs while expanding its services. The earnings per share growth of Coursera has been impressive. This year, the company has witnessed an EPS growth of 86.02%, with an even more significant projected growth of 190.18% for next year. These figures highlight Coursera's financial resilience and potential for continued expansion in the burgeoning online education market. Financially, Coursera has been on a rapid growth trajectory. The company's revenue soared from $293.5 million in 2020 to an impressive $523.8 million in 2022. This remarkable increase is a clear indicator of Coursera's successful growth strategy and its increasing appeal among learners globally. However, it's important to note that with this swift expansion, the company's net losses also widened, moving from $66.8 million in 2020 to $175.4 million in 2022. This trend underscores the costs associated with scaling up operations and expanding market reach. Despite these fiscal challenges, Coursera recently reported its third quarter GAAP earnings per share at -21 cents, surpassing expectations by 5 cents. Moreover, the company's revenue for the quarter reached $165.5 million, a 21.3% increase from the previous year and exceeding forecasts by $6.64 million. These numbers are indicative of Coursera's strong market presence and its ability to grow revenue, even amidst escalating costs. For investors looking for a stock in the evolving sector of online education with significant growth potential, Coursera Inc. presents a compelling option. Despite the growing pains associated with rapid expansion, COUR stands as a testament to the transformative power of online learning and its vast market potential. Continuing our exploration of under $20 stocks with promising long-term potential, we spotlight StoneCo Ltd, trading under the ticker symbol STNE. As a financial technology solutions provider, StoneCo is making significant strides in transforming commerce through its innovative platforms that support electronic transactions across various channels. StoneCo's stock performance this year has been impressive, boasting a year-to-date increase of 65.25%. This robust growth is a clear testament to the company's expanding influence in the fintech sector. The earnings per share growth for StoneCo is particularly striking, with an increase of 164.32% this year. This significant growth highlights the company's strong earnings and potential for continued expansion. The quarterly revenue growth of 29.61% and quarterly earnings growth of 115.03% further underscores StoneCo's financial strength and its ability to scale profitably. These numbers reflect StoneCo's effectiveness in harnessing growth opportunities, generating client loyalty, and achieving sustained profits. Despite its impressive growth, StoneCo's stock trades at a forward one-year price-to-earnings ratio of 17, a valuation that seems modest for a high-growth stock. This affordability could be attributed to the perceived risks associated with the company. StoneCo has faced its share of challenges, including management changes aimed at stabilizing its recovery efforts. While these changes are steps in the right direction, they contribute to the stock's volatility. For investors, StoneCo presents an intriguing opportunity. The stock's more than 60% increase this year reflects its growth trajectory and market confidence. However, it's essential for investors to consider the inherent risks in the company's recent management changes, which may influence its future performance. StoneCo Ltd emerges as a potential breakout stock in the fintech industry. With its significant growth, innovative solutions, and current valuation, it offers an attractive option for investors with a tolerance for risk and an eye for high growth potential. Moving forward in our list of under $20 stocks to consider for long-term investments, we focus on Archrock Inc., trading under the ticker AROC. As a key player in the oil and natural gas sector, Archrock specializes in providing essential operations, maintenance, service, and equipment for the production, processing, and transportation of these critical resources. Archrock's current market price stands at $14.49, matching the analyst's mean target price for the stock. This alignment suggests a consensus on its valuation in the current market context. The company has exhibited a strong year-to-date performance, with a notable increase of 61.36%, demonstrating robust growth and investor confidence in its market position. The earnings per share growth for Archrock this year has been remarkable, soaring to 177.80%. This significant increase in EPS reflects the company's growing profitability and its effective management strategies. Additionally, Archrock has reported a substantial quarterly earnings growth of 100.82%, further highlighting its financial strength and operational efficiency. A key factor contributing to the growing investor interest in Archrock is the analysts' optimism regarding the company's earnings prospects. There has been a strong agreement among analysts in revising EPS estimates higher, suggesting a positive outlook for the stock's future performance. This consensus is critical, as empirical research indicates a robust correlation between trends in earnings estimate revisions and near-term stock price movements. For investors, this indicates that Archrock Inc. could be poised for an upside, considering the recent positive adjustments in earnings expectations. The company's solid performance in a vital industry, combined with favorable analyst projections, positions AROC as a potentially lucrative investment in the energy sector. Concluding our exploration of under $20 stocks for long-term investment is Sprinklr Inc., known by its ticker CXM. As an innovator in the enterprise cloud software industry, Sprinklr stands out for its advanced solutions tailored to modern business needs. Sprinklr's current stock price of $15.68, coupled with an impressive year-to-date performance increase of 91.92%, positions it strongly in the tech market. The company's financial health is further bolstered by a robust gross margin of 75.45%, indicating its efficiency and profitability in the cloud software domain. One of the most striking aspects of Sprinklr's financials is the exponential earnings per share growth this year, an astonishing 2,902.06%. This remarkable increase reflects Sprinklr's expanding profitability and operational success. Additionally, the quarterly earnings growth of 139.89% highlights the company's capacity to consistently increase its earnings and adapt to the rapidly evolving tech industry. Currently, Sprinklr appears to be undervalued in the market. Valuation models suggest that the intrinsic value of the stock is around $19.07, higher than its current market price. This gap indicates a potential opportunity for investors to buy into a promising tech company at a price lower than its estimated true value. Interestingly, Sprinklr's stock is noted for its stability, as indicated by its low beta, meaning it's less volatile compared to the broader market. This stability suggests two key points for potential investors. First, the stock price may take some time to align with its intrinsic value, offering a window of investment opportunity. Second, once Sprinklr reaches its intrinsic value, there might be fewer opportunities to purchase at a lower price, due to the expected decrease in volatility. For investors seeking a stock in the cutting-edge sector of enterprise cloud software with a solid growth trajectory and a potential for value increase, Sprinklr Inc. presents a compelling option. Its impressive financial performance, combined with an undervalued stock price and market stability, makes CXM a stock to consider for those looking to diversify their portfolio in the tech sector. With that, we wrap up our list of under $20 stocks to watch for long-term investment. Each of these companies offers unique growth opportunities, and we hope this exploration helps you in making informed investment decisions. Thank you for joining us on Stocks Telegraph, and remember to subscribe for more insightful investment advice. Happy investing!